Investors and traders, welcome to the channel Market Chart Pattern. Today is 21st of August 2023, and we will be taking a look at the key US tech stocks as we always do for this video segment. This video is for educational purposes only, and it is not a financial advice. So we will start by taking a look at the Tesla stock. So when we did the last update on Tesla, that was about a week ago, Tesla was trading at or approaching a key support level around the 38.2% Fibonacci retracement. And we were observing that, and what has transpired over the course of last week is that it actually went below that, and the next key level that we also mentioned in the video was around $225 per share level, which was the 38.2% Fibonacci retracement. And we mentioned that there was a possibility the stock could actually go and touch that level, and in fact it happened, and the momentum was stronger. The price actually closed lower, but not for too long. And what we have seen is nice support come in from this trend line, and also right around the 38.2% Fibonacci retracement, where the market has closed above that today, and that is a good and positive sign for the stock. Also, what the stock has done is, from a candlesticks perspective, this pattern formation, let me actually blow it up for you guys a little bit. This formation is a variation of abandoned baby bottom formation here. So it is a candlestick pattern. You can actually have a look online, Google about it. It's never, the patterns are never really exact, or they are very rarely a textbook pattern formation, but in my opinion this is a abandoned baby bottom candlestick pattern. In fact, I'm going to write it here, so let me make it a little bit smaller. Here we go. Oops, why did it do that? Abandoned baby bottom. This is the candlestick pattern formation. So there we go. So as long as now this candle low is not broken, which is from last Friday, 18th of August, that is a low of $212 per share level, then the things are looking quite good, and maybe perhaps the bottom might be in for the Tesla stock. So the key is this low from last Friday, August 18th. So this is what we are watching, and let's actually also take a look at the stock from a weekly perspective. This is a longer term week, so of course the week has just started today being Monday. Last Friday we have this good support coming from a trend line here, but also we have this another a little line, this is what I like to call it, here coming in, and that also provided a support. So it's good to see that we have got a key Fibonacci level coming in, and also we have the, from a classical technical analysis perspective, some trendline support also coming in around that region, so that's always good. So this is what we are watching in the Tesla stock, and this is the candlestick pattern, and right, it went into the 38.2% Fibonacci retracement, a little bit lower, found a support, and what in fact it did is, this is the concept of the market symmetry that we were looking at, and it actually went below that. One of the things is that if we just look at this corrective action in the price, interesting thing is that it's more visible on the weekly chart. So let's take a look at this. If we just count the number of weeks, week 1, week 2, week 3, week 4, week 5, we don't know yet whether it's because the week is not over. So let's count it as 5 weeks for now. So that it has gone this much lower, this much faster in about 5 weeks. Last time when it went into a corrective pattern, then it took week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it has done that in about half the time. but the correction in terms of the amplitude was a little bit more. And I believe there's a concept in Elliott wave, although I do not practice Elliott wave myself. We are more about pattern recognition, that in a impulsive pattern formation or a motive wave, the corrective waves, they alternate. So that's, I believe, a wave 2 and a wave 4. They will alternate. So if, let's say, if this was an ABC pattern formation, and then it was just um, one flat or something like that. Again, please forgive me, all those people who follow Elliott wave, but just trying to put something together here. Okay, let's take a look at Apple now. Again, really nicely, Apple retraced 38.2% Fibonacci retracement. Almost it went there. It's quite normal to have this kind of a retracement. And look how much the stock went up by. It met all our upside targets. It in fact exceeded the targets. And then we were actually looking, or we were getting bullish around here. You can look our videos when it got around here. We were saying that, okay, we don't have any further upside targets, and we were just watching for the price action, and now it has nicely pulled back to right to the 38.2% Fibonacci retracement. Let's take a look at the Microsoft. Look, really nice pattern formation. It really came and touched that 38.2% retracement right coming in from here, this bottom around here, 9th of January. And the interesting thing about this is that it was nicely moving in a channel formation, and it broke below the channel formation, went into the zone or the area that we were actually watching for. So that's quite good to see. Let's take a look at Netflix. Again, really nice at the trend line. We were watching for this pattern formation. Our pattern was completed around 485. We were really looking for about 490, 495, but I think it was close enough. And now what the stock has done is retraced to 38.2% Fibonacci retracement, a little bit lower. Was finding support from this trend line. Let's take a look at NVDA. And NVDA. So there we go. So this stock, we have, let's take a look at on the weekly chart really quickly. We were looking for about $490 per share level as the kind of upper target for it, but look, the stock looks very strong. So maybe the pullback it has seen, it looks like maybe that is all what we are getting for this one. But again, we need to also pay attention to about this $500 and $508 per share level, where we have 1.272 expansion. But the action, the price action in this stock has been strong, so that's good to see. Let's take a look at Meta. So again, Meta has just retraced very close to about 38.2% Fibonacci retracement of this, and I believe there's also an expansion level coming here. It's always good to see a confluence level come in. So here we go. So 1.272, very close to. So this is like, the region is about $260, $250. This is like where we were expecting support to come in. Also, we have this market symmetry. It went a little bit lower, but again, into the kind of region we were watching for. I do want to point out that the stock is trading at around 78.6% Fibonacci retracement. So here we'll have to watch how the price action will move. Maybe it's possible it'll just go into sideways range for a while, or if the stock is really bullish, it's not just going to care about it, and the momentum will carry it higher. Let's take a look at Google looks very strong. Look, the market had a bit of a overall market had a bit of a correction, but what has Google done in the last 4 weeks? It's just nothing. It's just pretty much where it was. So it looks pretty good, actually strong. Then the other one, let's take a look at Shopify. So the Shopify had been trading nicely in this channel formation, and whenever it actually touched the top of the channel, it retraced back and went and touched the lower boundary of the channel. This time it did break below that, but right to the 38.2% Fibonacci retracement. So we'll have to wait and watch this one a little bit, although it has shown two consecutive days, bullish days. That's good for the stock. It's approaching very close to about 200-day moving average. So maybe it just goes into a bit of a consolidation, and then it begins to find or begin to form base and begin to rise from there. This is what we're looking at in the Shopify. Let's also take a look at Amazon. So Amazon, not too much of a pullback, but again, this stock is still below the swing high. So that is something which we are watching for. Then what else is left? Let's take a look at Roblox. So Roblox has been disappointing. The pattern formation that we were watching for, that's clearly broken. It also broke the $30 mark as well. And although today the market has shown some positive momentum, the stock has closed lower, so not looking good for Roblox. I believe I've covered pretty much all the stocks. Let's take a look at Broadcom as well. So let's take a look at Broadcom. So again, pretty expensive stock, $800 plus stock, and over the course of few days or weeks, we have just seen some sort of a pullback right into this bottom of this range here. Now it's getting back into the middle of the range. So this is what we're looking at in the Broadcom. So here we go, just doing a quick recap. Tesla stock went into that zone that we were looking for, about $225 per share level. Went a little bit below that. There was nice trendline support coming in, as we have seen on the weekly chart, also on the daily chart. And this pattern formation, the abandoned baby bottom, is a candlestick formation. And as long as that low of last Friday is not taken out, it is going to, in my opinion, a positive sign for the Tesla stock. So thank you very much for watching the video. If you like how we look at the markets using pattern recognition, Fibonacci analysis, then please do subscribe to the channel. And also, if you found this video of educational value, then please do hit that like button. That's an indication for me, and then it just encourages me to keep on making more videos for you guys. So thank you very much. Good luck and good trading.